everyone, and welcome to Pulse of Fisdom with Nirmal Bang. I'm Avan Bash. Now, as we're wrapping up 2024, all eyes on the new year. And I'm sure you all have New Year's resolutions, whether it's to eat healthier, get fitter, embrace new habits. But alongside those personal goals, it is the perfect time to also set for yourself some financial resolutions. After all, in today's fast paced world, becoming smarter with your money and your investments is as important as any other lifestyle change. So, who's going to help us to navigate the financial landscape and share insights on SIP flows, New Year's resolutions, and invaluable advice to make your financial journey more rewarding? Joining me is none other than Swarup Mohanty. He is the CEO of Mirae Asset Investment Managers. Thank you so much, Swarup, for taking time out to join in. And yes, I'm sure you've got your set of New Year's resolutions, and investors as well are looking to reset their financial goals. So what would be some of the advice and recommendations that you would have in terms of top financial solutions for the year ahead?
At the outset, thank you so much for having me. But yeah, I mean, when it comes to a new year, I just repeat the normal resolutions that one should do. So basic financial planning. One is always invest with a goal in mind. If there is no goal, then don't invest. Second, that goal will lead to an asset allocation. Learn that the asset allocation will make money, not any underlying asset or any particular market. The third most important part is redeem when you reach your goal.
Everyone also talks about the demographic dividend, how that's really working in our favor in India and thereby in the mutual fund industry. And you've also gone on to say that as the youngest country, India is going to be the highest wealth generating country in the world in the next 8 to 9 years. Can you elaborate a little bit more about what's driving this confidence?
Actually, the underlying is what is driving this whole feel good factor about this whole process of change from fixed assets to financial assets. I think when you go back, apart from the demography, what started with demon, the shift to digitization, and then COVID kind of changed it, and that's when people started looking at investing in a far better manner, more structured manner, and as a result, the outcome was to us, our industry. Personally, I'd never thought I would see these days before I kind of retire, but it's great to see the country, especially driven by the young, now moving towards financial assets. And when it comes to financial assets, mutual funds being this pass-through vehicle of its ability of giving any underlying through its various schemes stand out for any individual. Now that's where it's catching on. Just to give you a small data, before COVID, we were around 2.3 crore folios. That's like 25 years of work led to 2.3 crore folios. Now, on an average, we add 80 to 90 lakh crores per year. So what used to happen in 25 years is now happening in 1 or 2 years, and that will start now compounding as more and more young take to investing. The digitization, the increase in knowledge, the increase in social, economic levels of people are now driving people towards this side of the market. And to be fair, I think the whole environment of many of you writing about it, the distribution framework of the products and the advisory framework that sort of engulfs this whole thing is driving this uptake. And this is now here to stay.
Right. And we've also seen SIPs into mutual funds, and that has been growing at a very hectic clip. That could nearly double to 40,000 crores by next December. Tell us a little bit more about the SIP inflows and what you foresee for the year ahead.
I think in 23, when I'd said 24 December, the SIP flows will look like 25,000 crores per month, nobody had believed me. I think it's a one-way traffic. The go-to investment vehicle of the country seems to be the SIP route. And in a country like this, where people, a lot of people earn through salaries, it's probably the best cash flow solution to investing. And hence, we see consistent month-on-month rise in the SIP figures. I feel this figure could touch almost 40,000 crores next year. That's how we are compounding this as investors start adding, as some of the older investors start increasing their SIP figures because of their experience. We will see it will come to a moment, and I think that moment is year end 2025, when we will have this big breakout phase, and then I think the catapulting figure which we saw in broking post-COVID happening to mutual funds is my opinion.
And I'm sure that there's many first time investors and maybe they are taking New Year's resolutions to start entering the market via the SIP route. So what is the advice that you're going to give them?
Yeah, I think it's the right question at this moment of time. When you look at the last 2 3 years, I think money making in the stock market has become started looking very easy. It's not that easy. Companies takes years to build, and our job is to stay invested with some good companies, and over a period of time, some of them will create wealth for us. That's the process of investing in the stock markets. But when you look at the last 2 3 years, it defies exactly everything that I've said. So when you look at 2025, my basic and humble submission would be to mitigate all those and get back to realistic outcome of returns. That should be point number one. You've enjoyed fantastic returns for 2 3 years. We see the markets changing, the cycle of the market changing, and some core sectors, core themes, core part of the market coming back as we look at global data points normalizing. So my basic advice would be, if you look at next year, look at your portfolio by virtue of mutual fund sales and the figures that have come in the last 2 years. People have moved their monies more towards riskier asset. Nothing right or wrong with that, but it's a year where you can rebalance by adding the core back and making your portfolio far more stronger than it was, say, in the last 2 years. Just to simplify that, when you look at flows in the last 2 years, they've been more skewed towards small cap. But when you look at the markets now, the large caps look more attractive than they were, say, 2 years ago. And if you start adding the core back to your portfolio, the balanced output of that portfolio can be stronger.
It's also a high inflationary environment right now, and maybe investors are a little bit apprehensive. What is your outlook as to how investors should be adjusting their portfolio? Any specific sectors, or according to you, are there any specific asset classes that you think will offer protection against inflation?
That's why I've been harping on asset allocation as the theme for 2025. When you look at it from an investor's perspective, the basic of financial investing should be all money should beat inflation. Sometimes we have in our mind some investments being safe, but if the returns are below inflation, then you're actually losing money. So first thing to check for all investors is your entire portfolio beating inflation? If it is not, you have to do a deep dive into those and correct those and get them to places which would beat inflation. That's point number one. The point number two is, when you look at the markets or investing environment from an investor's perspective, I think they are spoiled for choice when it comes to 2025. The equity markets, which were talked about across, if you read or Google or do whatever, people were talking about prices being high. There was this word froth doing the rounds across. That is now looking far more reasonable than what it was, say, a year and a half earlier. We're still saying that it is now reasonable, not cheap, but it is definitely better than what it was last year. So if you're buying last year, there's no reason why you shouldn't be buying more this year. Secondly, with now the big election in the US, that being a known, and so much of talk now being talked about, interest rates now being corrected. So a lot of unknown on that part is moving to the known side, and those investors who had missed those opportunities on the longer side of investing get that opportunity back. So debt also starts looking very attractive in the next 5 6 months as we speak. And all said and done, the fragility of global markets remain, and hence commodities continue to make a play in the next 1 2 years as a good return generating option. So people who've been chasing a small part of the market now need to move to broad asset allocation, and opportunities across asset classes are there for you. So 2025 is all about putting your head down and allocating assets prudently as per your financial plan. I dare say people who get into asset allocations will win, and people who are return chasers or market timers might lose in 2025, is my basic submission.
There have been industry experts who have been talking about this shift in investor focus towards maybe riskier sectoral themes or even thematic schemes. What is your advice to investors who have invested in these, and why do you think that that trend has been growing?
It was a natural outcome of 2 years of market going one way. Then you start getting bolder, and you start getting bolder, you start taking riskier bets. And we saw that towards the end of last year, nothing right or wrong with it. And these are good opportunities. Some of the decisions that were taken would have been prudent at that point of time. And when you look at, I'm not a big fan of sector investing, but I'm a huge fan of thematic investing. And when you catch a theme, the theme starts growing over a period of time. I mean, say 5 years ago, your healthcare looked more like pharma. Today, it's expanding as a theme with general insurance, hospitals, and sooner or later you'll have diagnostics and all that entering that space. So it will start getting broader over a period. While pharma might be a sector, healthcare will be the theme. So when you catch a broad theme, the option of going with that remains, right? But just a small clarification, defense is a sector, defense is not a theme. So if you're looking at sectors, you need to watch that and catch the cycles. I'm a big fan of not predicting business cycles as an investor. I go to a fund manager for that. I back myself for looking at which are good companies, though I'm not allowed to invest in direct stocks. But if someone is doing that, I would say prefer direct stocks over business cycles. Those are very, very different acumen to get. So people who invest in sectors need to predict cycles. So that is a little tough for people. Even the best lose at it. So I would say those you leave to fund managers and concentrate on the broad market as such. Going forward, if you invested in those riskier assets, nothing wrong. It has just skewed your portfolio to a different risk profile. You can mitigate it by adding the core part of the portfolio next year. I'm again a not not a big fan of redeeming something just for the heck of it. I said at the beginning I will redeem only when I reach my goal. The best way to build a stronger portfolio is to rebalance, and the right way to rebalance would be to add some core or less risky assets next year, and hence the portfolio outcome can be far stronger than what it is at this moment.
So, going forward, if you could have a magnifying glass, what are the trends that you're predicting for the Indian mutual fund market in the year ahead in terms of sectoral allocations, in terms of investor preference?
I think from the last 2 years perspective, I think the markets have been very interesting. They have been very skewed to a certain small part of the market. When that happens, diversification stories take a back seat, and people who concentrate on that small part and build a larger allocation then tend to win. And now that's how the last 2 3 years have been. I can go on citing which pockets were going on, but it's common knowledge, so I'll not get into that. But when it comes to the last 2 3 months or of this particular, we did see some amount of it changing by the sheer fact that government capex started slowing down. As you rightly pointed out, inflation now going up, and we are talking about a fair amount of money now shifting back to the US because that part of the country has now got into a known trajectory. So money has flown back there, leading to some changes in the Indian markets. Our house view is when there are uncertainties like this, it's always good to come back to the core. And our view for 2025 could be that, if you build your business or portfolio around the strong core parts of Indian economy and concentrate on building portfolios on larger, stronger companies, along with some basic themes that we believe be the pillar of Indian economy, which is consumption, healthcare, banking, definitely, because some of those bank stocks are available at some great prices at this moment, and build it around these large themes and construct a portfolio. It's always prudent. But the other thing to note is that over the last 2 3 years, and especially post COVID, India has been one of the largest IPO listing countries of the world. In fact, in the last quarter, we were almost 30% of global IPO listing as we speak. So that's how large the India IPO or new company listing space has become. So when you look at most of the new IPOs, they've mostly in the mid and smaller part of the market. So earlier, our proverbial advice would be, say, a portfolio for a normal risk taking person would be 70-30, 70 towards large cap and 30 towards mid and small, which got a little less post COVID, and because the opportunities in mid and small were large, so we would say 60-40. But right now, for a slightly informed investor who can do a little bit of dip test on risk taking ability, the opportunities for fund managers on the mid and small caps have increased dramatically. So, what used to be a 70-30 advice say before COVID now is almost a 50-50 advice, 50 to large caps, 50 to mid and small. Still a little more weightage to mid caps because India will always be a mid cap story. But a well balanced, diversified portfolio will be good for all clients, and the opportunities will be there in 2025 to catch. Don't time the market, just accumulate the market. I think 2025 will be a great accumulation period for investors.
And it's interesting, Swarup, because Mirae Mutual Fund as well started its journey in 2008, and now the AUM has grown very smartly to a little under 2 lakh crore rupees. Can you tell us about what you foresee for Mirae?
Yeah, I think it's a little fortunate to say that we stand in front of you as the only organic global asset manager in India. So extremely thankful and fortunate to have our investors and partners in the form and shape that they are. It's been 16 years of track record in India. And in 16 years, with 2 lakh crores of AUM and almost 68 lakh folios, we built a good platform for ourselves. And then post COVID, we've increased our product range substantially to cater to all asset classes, cater to all demographies, and cater to all risk classes. We build a very strong platform, is what we feel. And if we continue going around doing our track record in a sane manner and retaining the fiduciary responsibility, the next 10 years can give us a lot of opportunities. This is completely subject to us holding our part of the discussion intact of creating consistent track record as we speak. But when we talk about Mirae Asset in our style of fund management, we always discuss the risk reward. And when you look at the last 2 years or 3 years in the market, people who talk diversification, who talk more on the risk side, have been a little bit on the back step. But as market cycles turn and people start realizing as they become mature as investors that it's a business of risk mitigation, though it is perceived to be a business of a return generation. So please always keep the risk associated with all asset classes in mind. And we always bring that discussion to the table. So people who understand that stay long with us. And we've been fortunate to have 68 lakh folios with us who've remained with us for quite a long time. And hopefully, if we retain this side of the story of creating or continuing to create a consistent track record with this platform, we do see a great future for us in the next decade.
Swarup, it's been a pleasure interacting with you. Thank you so much for joining
Thanks,
us.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.